Hello, everyone. Welcome to Charts Focus 1, where we teach you how to work hard and trade smart. In this video, I want to talk about the 4 dangers that are looming over the global economy and the markets that may cause a market crash. Now, there will be no editing in this video, no goofy GIFs, or is it GIFs? I don't know. But all I know is that I will get straight to the point here for you all. Now, hold on to your seats because we have a lot of ground to cover, and some of them sound like conspiracy theories or a plot for an upcoming movie, but that's how crazy this connected world is getting right now. Things are literally heating up as we're seeing global tensions rising as economies rise out of the spoils of the mess that was COVID-19. Now, what I have in front of your guys' eyes is the chart of the S&P 500, or the benchmark for all equity markets. So far, year to date, we are down a little over 15% from all-time highs. And you have probably seen the headlines by now that this year was the worst market performance ever since this specific year or that specific year or blah, 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 right? But we don't need to care about that right now. What we need to care about right now are the potential dangers that the global tensions are curating for the overall financial markets. Now, from a technical standpoint, the markets don't look too bad at all. And this is the daily time frame of SPY. But if you take a look at the bigger picture time frame, so the weekly time frame here, and go back down to the March 2020 dip, right? And the March 2020 low since the 2020 market crash. And if you kind of trace the price action back to the upside, you see that we had an amazing gains the last 2 years. And plus, we're also seeing a bullish flag pattern forming. And where is this bull flag? Well, we have our flagpole, which is made by this ascending channel that we've been at Charts Focus 1 looking at for the last 2 years. And then our flag here is from this year's price action. So the flag is curated by this descending resistance trend line and this descending support trend line. So nothing looks too bad so far. I mean, we keep on bouncing at this descending level of support and rejecting at this descending level of resistance, which is great because we are basically forming the flag, right? We're not breaking to the upside yet. We're not breaking to the downside yet, which would negate this bullish flag. So far, we're still within the parameters of this bullish flag. All right, with that in mind, let's go ahead and dissect these 4 global issues. First, let's go ahead and talk about what the world has their eyes on right now, the Ukraine war. Russia is attacking Ukraine. Now, I won't go political and explain who is right and who is not right. We know that there's a conflict and the West has retaliated against Russia's actions by implementing global sanctions directed at Russia's economy. And due to those sanctions, the ruble, Russia's currency, tumbled once those sanctions began to roll out. And more recently, Russia cut off its gas supply to Russian-dependent gas countries in Europe, which were Poland and Bulgaria, as a warning to other European or EU countries standing with NATO and the overall West. So that is a brief summary so far. But let's talk about the mysterious explosions and fires in Russia. Okay, and this is what we have in our headline here from Washington Post. A couple of days ago, there were multiple explosions and fires in important facilities in Russia. Those buildings included a supply/storage depot, Russia's biggest chemical plant, and a sensitive defense research site. There were other explosions that took out an ammunition depot and oil storage depots as well. Now, if you take a look at this video, okay, that a Russian civilian, I believe so, it was a Russian civilian, recorded. You can see that there were huge explosions. There's, multiple fires going on, and there's smoke everywhere, okay? But what's even more interesting is that all those three important buildings were located in three different Russian cities that were very, very close to the Ukrainian border. If you take a look at the map provided by this article, you can see these three cities, okay? Now, it was also kind of obvious that this was targeted at the Russian offensive on the Ukrainian city of Donbass, right? Donbass is a city that's been heavily covered by multiple media outlets as well. And as it was most likely, right, to hinder Russian forces there with supply and any other Russian offensive moves on the Donbass city. But it really makes you start thinking if this was an Ukrainian attack, which it most likely was. But this is the thought-provoking point. Was it a coordinated attack from Ukraine with insiders from Russia? Or was it just simply an inside job by dissident Russians who are not approving of this war? Or was it the job of Ukraine with undercover help from the West, specifically the US? So how does all this relate to anything? How does all these things that are happening in Russia relate to the global issues? Well, in nearly the same time frame, the United States is experiencing some similar fires and explosions, well, mostly fires. Since the month of March, there have been constant fires in the agricultural sector. About 24 plus fires and explosions. These fires were from major/primary food processing buildings, farms, food banks, food plants, and etc. People who have witnessed such fires and explosions are stating that many acres or truckloads of products and produce have been lost and multiple properties owned by these places. Now, the weird thing is that the local media for nearly each incident have been almost downplaying them when human lives have been affected, hurt, and hospitalized. That doesn't sound like your local news, right? Now, I don't know if you guys remember me saying that these incidents may sound like conspiracy theories, but they're true. But here's where it gets even weirder. Government agencies and media sources are continuously saying that there isn't some radical conspiracy push to limit our agricultural supply while demand is high. They're literally saying that in front of our faces, that there's no radical conspiracy. And on top of that, what's even weirder is that they're completely dismissing that there aren't any connections to each individual incident. Now, of course, we can logically deduct that each incident was unique, but we can't just ignore the convenient timing they have with each other and the fact that these huge fires are occurring when we are in a dire need to have more agricultural yield to meet the demands that the industry is currently facing. Now, there can be multiple variables that have caused each fire, but the constant that is apparent in all these incidents is that they are way too close to each other timing-wise, and they're all involved in the same industry. I mean, just based off of this article, there are multiple major food processing plants like Azure Standard Headquarters, Taylor Farms, Gem State Processing, Maricopa Food Pantry, Shearer's Foods, and etc. Okay. Not to mention, the West has put on some incredible sanctions on Russia due to their actions on Ukraine, specifically to its commodities. So we have to put our tinfoil hats on and wonder, is there somehow a connection to these agricultural fires and explosions in the US? and the fires and explosions in Russia? Or could both of them be inside jobs perpetuated by either side? Well, we won't know for now, or we will never know. And what's even more interesting, guys, is that the FBI warns of targeted cyber attacks on food plants after mysterious rash of fires. And guess what country has been the spotlight for cyber attacks? Russia. Okay, now let's take off our tinfoil hats and talk about the heavy stuff, currencies. The second most pressing matter to the world right now, so obviously the US and Russia are the first most pressing matters, is an all-right war with currencies as countries inflate the value of their own currency to hurt and devalue other countries' currencies. We saw this when Russia's ruble fell off the cliff as sanctions hit its economy. Currently, the Kremlin was able to save the ruble and from a default as they paid their bond obligations using their stash of US dollars, which is very, very ironic. Now, as that is happening in Russia, Japan is in a dire situation with its currency, the Japanese yen against the US dollar. Now, if you guys don't know why I'm saying the Japanese yen against the US dollar, well, currencies are traded in pairs, which means when you buy one currency, you need to sell in another currency depending on what pair that you choose to trade. Now, the US dollar is basically used as a benchmark currency against other global currencies due to its strong value. And right now, the US dollar is currently climbing higher and higher and higher. Now, the yen is currently devaluing so much that the Japanese government has to choose between inducing an interest rate hike recession or just simply allowing the yen to continue to devalue. Now, based on this chart provided by Google here, if you take a look at the 1-year chart, just the 1-year chart here, you can clearly see that the Japanese yen looks exactly like the Russian ruble, where it simply fell off the cliff just from this year. And if you take a look at the 5-year chart, it looks even worse. And if you take a look at the max chart that Google provides, the yen's value hasn't gotten anywhere since the 1990s. But why is it devaluing here? Well, first off, they have been printing money for years, as they have always been looking to keep interest rates low and inflation low at a target of 2%. Now, who does that sound like? The Federal Reserve of the United States. But increasing prices around the world, especially commodities that are crucial to Japan's economy and its exports, are tightening their outlook on their current policies. However, even with all of that going on, the BOJ or Bank of Japan is actually staying dovish, not hawkish, and not tightening their monetary policy. Instead, they're doing the exact opposite. If you take a look at this Reuters article, it says the BOJ bolsters commitment to ultra easy policy. So they're staying dovish and looking to keep or even lower their current interest rates, which is mind-blowing, right? I mean, right here it says, the Bank of Japan on Thursday strengthened its commitment to keep interest rates ultra low by vowing to buy unlimited amount of bonds daily to defend its yield target, triggering a fresh sell-off in the yen and sending government bonds rallying. That is completely insane. So of course, the yen keeps on plunging to this day, and especially after this news came out. Now, this may not sound like a situation that the US or the world has to worry about, but people fail to realize how much the world actually relies on Japan's economy, especially its exports. And guess what? It is a close second from China as a global exporter. They are second place in exports. So if Japan's yen is allowed to crash, their predicament will provide a fair warning to other countries with their currencies and how they tackle the core CPI or consumer price index, or basically inflation. But there has been some speculation that the Japanese government wants a dovish BOJ or Bank of Japan because it will allow their exports to cost a lot less. Remember, they're second place as a global exporter. So in short, the yen loses value, meaning Japan can export a lot more to international companies at a cheaper price, but that would also mean there are more expensive imports for their own domestic markets. So basically a double-edged sword. But this isn't actually surprising that this was the case, because this has been a continuous speculation ever since the BOJ decided to devalue their yen back in 2013 while purchasing 1.4 trillion US dollars in assets for 2 years in order to bring inflation to their target of 2%. This rapid ballooning of assets to their balance sheet really did a number on their yen, as I've shown you on the charts, and has been ever since. Now, with the BOJ confirming that they will stay dovish even with the macroeconomic factors squeezing their economy, I actually do not know what they're trying to do. I don't know what their actual intentions are. Now, they may be just taking the invisible hand of the market to do its thing to the extreme here by not stepping in at all to prevent any further devaluation of the yen, just so that they can prevent a recession, especially an interest rate hike induced recession. But of course, we will see what happens once the whole structure cracks under macroeconomic pressure, as that time will eventually come, especially with what they're doing right now. Okay, so lastly, let's talk about China. So China is in a whole political, societal mess right now, as their zero COVID policy is ruining the fabric of their political competency and power. If you guys don't know what is happening, just simply Google Shanghai, China, and you will immediately see the absurdness that is going on. But I am not here to describe what is going on there. So China is on the brink of breaking as well, just like Japan, but not in its currency, which is the Chinese yuan, as that is a whole nother world and topic to discuss. For most of the COVID-19 outbreak around the world, China was able to successfully keep COVID cases down, which is amazing in itself. But until March of this year, when there was an outbreak in Shanghai, which is China's biggest city based on per capita. Now, if you guys don't remember or never seen the video, a representative from the Council of Chinese Foreign Relations was in an interview, and he was recorded saying that the zero COVID policy was, quote, not just the success of the zero COVID strategy, but it could be used to showcase the superiority of the Chinese political system. Now, if you take that quote as face value, he was basically saying that China is indeed using the zero COVID strategy in order to keep control of the masses and the virus itself, and show the whole entire world that it can keep control of both of those two at the same time. Now, I am not alone in this thought as well. Analysts worldwide are convinced that China is doing this for the sole purpose, for that specific purpose, even if it costs their productivity and GDP. How are they so sure? Well, take a look at Shanghai's port. Global shipping update. China is about to wreck your summer. So China has basically literally stopped most, if not all, any imports and exports from entering or exiting the port. Do you see how many containers are just sitting here? And do you see how many ships are stranded outside the port of Shanghai? And guess what? The port of Shanghai is the largest shipping container port in the whole entire world, with nearly 45 million in traffic per annum or TPE volume in 2019. Now, there are some personal implications to this that I want to share with you guys. So politically, China is a great friend of Russia, and they secured their friendship even more during the Beijing Winter Olympics earlier this year. All you have to do is search it up on Google and see what happened. Now, with everything that is happening with Russia and Ukraine and all the sanctions, Russia's economy and currency tanked, as we talked about before. And in China's eyes, that is a huge no-no, because that might have even scared China to be a good friend and ally of Russia, because in an official statement by China's Foreign Minister Wang Yi, China was not going to be a, quote, party to the Ukraine crisis, right? China is not a party to the Ukraine crisis provided by this political article. Okay, and this is Wang Yi. And this makes sense, right? China has their own domestic issue going on with their control over the zero COVID policy, and they can't risk letting the world or the West put sanctions on their own economy, right? And putting their own productivity and GDP down because of the West's sanctions. But, which by the way, okay, I don't think the West would do that to China anyway, due to obvious reasons, right? But that's not all. China seems to be trying to hide the fact that their GDP and productivity has actually slowed down in the first quarter of this year, right? So instead of really, possibly in the, maybe in the future, if the West really decides to put sanctions on China, if China decides to help Moscow and Russia, they don't want their cause of their own GDP and productivity going down, okay, because of the West's sanctions, because to them, that will be embarrassing, just political wise. Now, if I put my tinfoil hat back on, they're most likely attributing a slower GDP growth to their COVID cases and the fact that they need to show that the control with their zero COVID policy is absolute. Because in their eyes, the only reason why their productivity slowed down was due to their reasonable policy, all for the sake of saving their political competency. Now, even more damning in my eyes is that President Xi Jinping has an election coming up. Now, why is that important? Well, he is looking to see right now if he can get the full support and endorsement from the Chinese Communist Party for a third term, right? And this third term, he's basically trying to break all the rules here, right? And all the precedents that has been made by the previous leaders of China. So it's all about pointing their fingers to COVID rather than the real reasons that may not have even surfaced yet to show that there are cracks in their resilient economy and markets. And remember, they're trying to save face here, not trying to be embarrassed. The direction that China's economy goes forward from this point forward will really affect the rest of the world this year. So we need to keep an eye on them as time goes by. Okay, so we talked about Russia, number one, the US, number two, Japan, number three, and China, number four. So what is the conclusion here? I personally believe we are en route to another revolution. not to the scales of the Industrial Revolution, but the coming of a slightly new, nuanced revolution, or the coming of a new human age. And I think this is where Cathie Wood, the CEO and founder of ARK Invest, comes in. Her vision on innovation and new technology is perfectly aligned with all of the macroeconomic pressures that we are currently seeing. And if you guys don't know about ARKK, right, this is the most popular ticker that people look at for her ARK Invest company and firm, you can clearly see that there was a huge, big rise after the COVID March 2020 dip, because this was an indication that people were thinking that, oh, the COVID crisis was going to be the turn of a new age in human society. And this is why the companies that Cathie invested in were going up in value a lot. And this is where Cathie Wood also got a lot of fame, not just because of her Tesla price targets. Now, if all these sectors and industries crack due to these global tensions and issues, that will make more room for market share and new emerging markets, especially for the companies that ARK has invested, and they can have a chance to prove their utility and presence in the new age. So now what am I talking about? For example, there are ways to counter the bottleneck effects and strains on the agricultural industry as they experience those calamities that we just talked about, like those explosions and fires and limited supply, low agricultural yield, and high demand. So some of these counters are smarter technology like AI to detect and forecast harsh weather, AI tech automation for farm machinery, specific robots to help out farm labor, and advanced data analysis for the betterment of crop yields. So let's say if she is correct in the next 2 to 3 decades, or if she's dead wrong and we're starting to see an actual global human crisis. And so this is Cathie Wood's ultimate theory that has billions of money on the line, including hers, that can cause a paradigm shift in the markets and eventually the entire world. So will all of these 4 frontiers collide and cause a market crash? We don't know for now, but time will tell. For now, currently, the markets have already been spooked to start this year off, and looks to get even more spooked as everything continues to develop in all of those 4 frontiers: Russia, the US, Japan, and China. All right, if you guys thought that was a good, thought-provoking video, make sure to subscribe, like, and share. Leave a comment down below on what your thoughts are on all of this, and if you think that there are any connections between the 4 looming dangers. If you guys want to know more about our CFO Stream Watch newsletter and exclusive CFO Discord, take a look at the description box below with all of the links. And all the links that are seen in this video are provided in the description box below as well. So make sure you guys take a look over all those articles and read them for yourself. All right, so that is all I have for you all today in this video. I will catch you guys on another video. And remember, work hard and trade smart.